Hi, and welcome to the Stock Scores Market Minutes for October 24th, 2016. This week's topic, where will your stock hit its head? Stocks that rally into resistance usually get stuck at that ceiling price. Now, resistance can exist at past tops, past high points, or at downward trend lines. And to get through resistance requires stronger than normal volume. Now, make sure that you have enough reward potential up to resistance to justify the risk of the trade. So if you're buying a stock, you want to have enough room to the next level of resistance to make the trade worthwhile. So let's look at a chart here. This is a 30-day, 60-minute chart of a stock that I've been watching lately. And what I want you to notice is that during times of strength, like it had here and here and here, it ultimately got stopped at resistance. Now this first time, the downward trend line stopped it. The second time, horizontal resistance at a past price peak stopped it. And then again here we had that downward trend line hold up. And only recently has it been able to break the downward trend line, but it stalled at that old price peak. Well, then it broke through that, so now the next stop will be this price peak. Now you're probably saying, well, what about back here when it had that big break? There doesn't seem to be any resistance there. However, if you go look at the daily chart of this stock, ENDP, you will see that it rallied up to resistance on the daily chart, which was some time before. So when looking for the potential for how high stocks can go, look at past price peaks and trend lines that really help you to determine the ultimate stopping point where these stocks will hit their head. All right, let's take a look at the markets as we always do. This is a chart of the S&P 500. This is a 30-day, 60-minute chart. And we had been building a pattern with support like this, and that was broken, not this most recent week, but the previous one. That put us into a little bit of a bearish pattern, but actually through the last week, we've been building optimism towards resistance. Notice every time it comes up to resistance, it was getting stuck. So it would rally and fall, rally and fall, rally and fall. And on Friday, it opened weak, but it barely held that upward trend line. And now the question is it going to be able to break through that zone, or is this longer term line of resistance going to hold it back? So what you want to watch for next week is, do we break support or do we break up through that resistance level? That's the short term view of the S&P 500. Now, longer term view, we have broken the upward trend line. So if we drew that trend line there, we're just tickling through it barely. I wouldn't say it's a decisive break, and this week the market tried to hold. This is that downward trend line that I showed you here. Okay, that's the same thing. This is a 30-day, 60-minute chart. This is a weekly chart, so that shows up there. And what we want to watch for is, do we break down to make a more decisive break, in which case we're probably going to fall into this zone, or does the market break up and then test that resistance at the old highs? So that's the things you want to watch for in the next little while. Now on the Russell 2000, which is the US small caps, we have that upward trend line that again was just slightly broken, holding support right there so far, a little bit of falling tops in here. And so if we get a breakdown through that floor, we're probably headed down quite a bit more. If we can break this cycle of falling tops, then maybe we rally into that resistance zone, and we can call this a flag pattern with the upward trend into the flag. So right now, hard to call. I would say just watch for a break either up through this zone or down through this support level to tell you where the market is going to go next. All right, on the Canadian market. Now last week I said that the Canadian market was gearing up for a breakout. It just hadn't happened yet. Well, it did happen this week. Right there we had the break from an ascending triangle pattern. Ascending because the bottoms are rising over time. That is a sign of optimism. Through resistance, that was the ceiling price that the market kept hitting. That was the ceiling it was hitting its head on, but it broke through there, paused a little bit, and now looks like it wants to go higher. How much higher? That's where we go to the longer term time frame. There's that breakthrough resistance. Next stop up in here. So we don't have considerable upside, but still probably 1 or 2 more weeks of strength before the market hits its head yet again. On the TSX venture market, heavily dominated by mining stocks, we saw that upward trend get broken. We've now been building falling tops ever since towards support. You could say that we actually broke support this week right there. I think more likely to go lower than higher in the near term. The only caveat is if it can break this cycle of falling tops, break to the upside, well, then maybe we'll retest those highs. As it stands right now, I would be cautious with the TSX Venture. On the Treasury bond side, of course, the bond market, a helpful indicator of where interest rates are going to go. If this is going down, that means the market expects interest rates to go up. And here we have our upward trend line that was broken. We've been moving lower ever since. Support down in here. I think we've got more downside in the Treasury bond market, which means more upside for interest rates near term as we move toward that December Fed meeting where many believe the Fed will raise rates. Market predicting about a 68-70% chance that the Fed will raise interest rates in December. On to the US dollar, which of course benefits from a raise in rates. And you can see that we broke resistance at the downward trend line 2 or 3 weeks ago. We've been inching higher ever since. We're going to stall here probably, get stuck there, and then the next stop here, and then the next stop here, and then the next stop up in there. So we got lots of resistance to work through, but the momentum for the US dollar is up again as the market expects interest rates to be raised, which is good for the US dollar, or at least bullish for the US dollar. Now, moving on to gold, that was the breakdown that I talked about 3 weeks ago when we broke that upward trend line from falling tops. Typical of a market that breaks through a support, we often get a little oversold. You can see the trend lines there, and we're quite far below it. Wouldn't surprise me if we go up a little bit in the near term and then roll over and test this support. So I think short term, we could get a little bit of a bounce back rally for a couple of weeks and then ultimately roll over again as we get closer to December and a likely raise of interest rates, which is bad for gold, and that would send gold down to that support zone. On the US oil side, we've got a sideways trading range that has been in place for a number of months. That stability has been good for oil stocks. Oil stocks slowly doing well. Probably one of the leading sectors in a pretty complacent, boring market the last couple of months. But it's going to hit its head on resistance right there. And as long as it holds support right there, it's okay. It's a neutral market that's trending sideways. And the VIX, which tells us whether there is fear in the market. We get little spikes of fear here and there, but none of them have been sustained. And right now we're moving to new lows. That tells us that investors are pretty complacent, not expecting a major correction. That may be a little bit of a misleading thing because I do think that the markets are showing that we could see a breakdown. So watch this. If the VIX can break that little downward trend line with a spike up, we may get one of these 2 or 3 day rallies in the VIX. And you can trade that. Also tells us that the market going to back up a little bit. So my ratings then, before we get into the trade of the week: bearish long-term on US stocks, bearish short-term, not sharply so. We haven't had a real strong breakdown yet. We're just in a real cautious zone, and I'd like to stay cautious with US stocks right now. On the Canadian side, that strength in oil stocks has that market looking pretty bullish. The banking stocks, heavily dependent upon the oil industry, have been doing well. That's helping that market. So we've got a lot of good things going on in certain sectors in Canada. Other sectors are pretty dead. On the gold side, bearish long-term because of that break of the upward trend line. Short-term, it's trying to bounce back from being oversold. That's why I put a neutral rating on it. Oil, neutral, both long and short-term. We basically got a market that's trying to stabilize and go sideways, and that's actually good given the weakness we've seen in oil for the last few years. U.S. stocks are showing complacency right now with some pessimism building. There's really no strong show of opinion that investors are nervous and scared, but we should be cautious until we get a decisive move to the upside that shows the buyers are back. Canadian stocks are benefiting from that recovery in oil and appear likely to continue higher in the weeks ahead. Gold is pausing after that break of the upward trend line. We could see a little bit of a rally short term, but I do want you to be cautious with gold and gold stocks. Oil is stable, fear is low. All right, let's get into this week's trade of the week. This is First Solar, bought it right there on one of my day trading strategies. I played this one almost to perfection. I think I sold it either right here or right here. I can't recall, but right around that 5-to-1 reward for risk zone. How did I find it? I ran a routine that I use. I can use that either on stock scores or in TradeStation using the proprietary indicators I have for TradeStation. It shows me which stocks are trading abnormally, trading on with some action that is not in the normal flow of volume and price action. And when I see those stocks, I watch for certain entry signals. In this particular case, we had a flag pattern and then a break of the flag, and that led to an upward move. Flags don't always work. They only work in certain situations, and that's what those indicators that I've developed for TradeStation really help with. Hope you've liked this video. Please click on the like button. Please subscribe to the channel. And if you have any comments, I'm happy to answer them. Leave them at the bottom. Have a great week in the market and trade well.